Hey everybody, Brian here. Today is Friday, June 5th, 2015. Hope you had a good week in the market. The S&P 500 did lose some ground here this week, starting the month off with a little bit of a loss, down 0.2%, as did the NASDAQ. Russell 2000 had a real good day today, and that helped add to the gains for the week. Semiconductors, we saw some big profit taking in there, and actually that profit taking ran pretty deep. We'll take a look at that here in a moment. But overall, just kind of a mixed message for this market. Bonds got hit hard, as did the IYR, of course, because that is interest rate sensitive. So let's take a look at it here. We've got the S&P 500 closing just below the 50-day moving average. And as you can see on this chart, there's been no magic to the 50-day moving average this year. Buying at a 50-day moving average has made, been no better than, a guess, really. But we have the year-to-date, kind of the trend line that we've been riding here that, we can kind of call this the range of the trend that we've seen, and we're at the lower end of that trend line. And trend lines, again, are always should be drawn with a crayon, not with a sharp edge and a ruler. But we've got the next little level of potential support down here at the low that we saw at the beginning of May. Looking at at this daily chart, of course, we have the market broke out a couple weeks ago, and it's just kind of been meandering around, and now we're starting to see some deeper selling. It's done no harm to the longer term uptrend, of course, but we have to be vigilant anytime the market starts selling off. And like we saw this week, we had the market try to get back above some important levels here, but failed to hold, and we are making lower highs and lower lows below a declining 5-day moving average. So right now the intermediate term is guilty till proven innocent, meaning that we don't want to make new purchases until it can recover and show us that this is nothing more than a pullback. For now, though, again, the bigger picture says it most likely is just a pullback because we have this longer term uptrend, and we're coming into an area of prior consolidation in this area too. So this should be support, but if it doesn't hold as support, that's why you don't buy in this area. What we want to look at right now, we'll look at the 30-minute chart so we can see it with a little bit more clarity by backing it up, is that this prior little band of support that's been holding for the last couple of weeks has held as resistance here today. So that tells us that, again, we're going to need to get back above 211 or so just to make the intermediate term neutral. Right now, it's guilty till proven innocent. The NASDAQ, same kind of scenario, that on the intermediate term time frame, we had higher highs and higher lows with a rising 5-day moving average. The market started to turn sideways in here, and now we've broken support. That support seems to be holding as resistance between 109.75 to 110 really is our band of resistance right now. If we can push up beyond that level, then it turns the market more neutral. But right now, we're guilty till proven innocent below this declining 5-day moving average, and it seems as though we should see some further selling. Perhaps, the 50-day moving average is going to be more important for the NASDAQ. We'll have to see. But right now, you just don't want to jump to conclusions. You don't want to buy because we have a potential trend line. You want to sit back and observe, shorten your time frames, maybe do a little bit of scalping on the short side. But for now, it depends on, of course, what stocks you're in as well, because we have a lot of stocks making nice moves, and that's what the focus each and every day is in Alpha Trends, that during periods of uncertainty where we have the intermediate term trend lower, we'll still look at stocks on the long side, but being aware that the stocks are going to trade on their own individual merits. They don't always have to be correlated to the market. And if the market concerns us, then we lower our share size and try to minimize the risk, the uncertainty risk. So the Russell 2000 had a good week here. As we know, the market broke a little bit of resistance, and then it kind of gave reason for concern on Thursday, because on Thursday it broke down and seemed as though, that level that we wanted to see hold at 125 had failed, and this morning we broke down a little bit further but rallied up very nicely here. So next week we're going to see that this 123.25 to 123.5 is going to be the key level for this market to hold. If it can hold above that, we'll still give the benefit of the doubt to the buyers, and the Russell 2000 is really the stronger looking market once again. We've got that 10-day moving average rising, and the market is above that. The 20-day moving average coming up through that 50 50-day as well. So the longer term trend, of course, is still higher here. We know, of course, that we saw this prior resistance holding a support, and 120 is a big level on the bigger excuse me, the bigger time frame. On an intermediate term time frame, we've got this level down here, and on the short term time frame, next week it'd be nice to see maybe 124 to 124.75 hold, but the Russell 2000 is behaving well. So you don't trade the Russell 2000 based on your view of the Nasdaq. You trade the Russell 2000 based on what the Russell 2000 is doing, and vice versa. Semiconductors, we had seen a pretty big breakout after some mergers and acquisitions in the semiconductor group last week, and they had broken this level of resistance at $57 and made that real nice run. But this pullback, this is why, again, I never try to buy pullbacks. I buy after a pullback has settled down. But this pullback got, I think, a little bit too deep, saying that this is, that maybe the semiconductors are in need of a bigger rest. Bigger rest after this big run that they've had, that perhaps it's time to just settle down a little bit. So we do have this market, had a tough week, obviously, and we're into this prior important level. It has the potential to become support, but there's no advantage to being a buyer while the momentum is still lower. So going into next week, the semiconductors, I think even if they bled off a little bit further down towards that 50-day moving average, maybe they'll settle down and start to heal a little bit, but there's really no advantage to being involved in the semiconductors. Financials are behaving well. They are still holding above this prior band of resistance right in here. So this week we came down and tested it once again. They've been a very choppy group, but they are in a strong uptrend here on the weekly time frame and the daily time frame. This is going to be our important level going forward that we want to see hold, 2450. Above 2450, we remain innocent till proven guilty, and we've got this rising 5-day moving average. So perhaps next week, back above 2495-ish, this market can get some more momentum and continue this run that it's had. Undergoing, that is. So we've got mixed messages. When we have mixed messages from the groups like the S&P versus the Russell 2000 and that, then we just want to be aware that we're in a higher risk environment, that not everything is going to move together, and that is why we spend our time focusing on great individual stock ideas like Noah that we're involved in from down here. Anyways, let's take a look at the biotechs too. They had a good week. They are right up at the top end of the range. They've only closed above this level maybe 2 or 3 times, and as long as they maintain above 355 or so, then you want to ignore anyone who says they're up too much, or that this is a double top or a triple top or any of that nonsense. We've got a consolidation and an uptrend, and breaking beyond here looks like it should be able to continue to move higher. The bonds, last week we saw that they did get a bounce from that volume weighted average price from January of 14. And again, a bounce is just a bounce. When the primary trend is lower like it is in the bonds, you don't expect those rallies to hold for the longer term. And as the market broke below that 5-day moving average, it started to make a pattern of lower highs and lower lows and finished very close to the lows for the week. So bonds remain guilty till proven innocent. They're in a downtrend. As we spoke about, the measured move from the measured move, the height of this move would equal to a move down towards about 116.30. And then, of course, we've also got Fibonacci that we can do off of there, and we see that a 2/3 retracement would bring us down towards 115.5. So it seems as though bonds are still selling off here, creating a rising interest rate environment, regardless of what the Fed does. The Fed often follows the market. The market is an anticipator. It discounts the past and looks forward. So perhaps the bond market is telling us something about interest rates. That's not my area of interest or expertise, but it's just something to consider. Shares of Apple continued their pullback a little bit here this week. We had, of course, this market below a declining 5-day moving average, so the intermediate term remains guilty till proven innocent. There's no reason to be a buyer while it's declining, so we're going to need to see Apple heal a little bit. Perhaps it tests its 50-day moving average, but it's just been kind of range bound in here. And that's going to do it for me for today, so hope everyone has a good weekend, and I will talk to you next week.